The problem is people seem to think the best investors never lose. Of course they do. No one has a 100% success rate. In fact, success rates of the best investors in the world can actually be well under 10%. Warren Buffett has a success rate of 60%. Some high-risk VC funds have a 10% hit rate. The key to being a successful investor is making sure that the winners are substantial and the losers are small. In today's episode, we're going to be looking into the biggest wins and losses that Mitch has achieved this year and summarize what we've learned from them and how we're going to prepare for the future year of 2026. By the end of this episode, you're going to have a very clear insight into the wins and losses that we've had in 2025. And you're also going to have a much clearer understanding of how our strategy ensures that even with a low hit rate, our profits are substantial. Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it. So Mitch, welcome back to the studio.
Thank you. Thank you for having me again.
I think our last episode together was our highest performing episode. So we could say statistically, the audience is in for a treat today. And the first thing I want to ask you, Mitch, is how has everything been going in the world of crypto over the past month?
Yeah, I think kind of the past month has probably been the flavor of the year, really. We could talk about kind of the last year, but the market for the most part has probably been negative, I would say, both from kind of an emotional standpoint, psychological standpoint, but both with prices as well. I think this year's been probably, in brutal honesty, pretty tough for crypto holders. And the reason isn't because of the native crypto pricing, it's because of other asset classes. The stock markets have gone up. We've seen gold and silver go up. And unfortunately, crypto's mainly, if we're looking at Bitcoin, traded sideways, whilst most altcoins have traded down. And I think that's been the case the last month as well. So overall, not the best if you're a holder, but if you're not a holder or you're looking to get invested or you're looking to accumulate more, which is something we'll obviously talk about what we did in the past throughout this episode, I think it's looking like a pretty good opportunity. So
100%. And look, I want to get into what we're thinking coming forward. But before I do that, there seems to be a bit of a magical level at the moment that Bitcoin's struggling to break through, but also struggling to break down through as well. So what are those two price points that we're sitting between right now? And what do you feel like needs to happen? What price point do we need to push through to feel bullish again? Yeah,
so I guess ever since we've kind of broken out of that kind of range we had last year, which was kind of a similar year in all honesty, until we got to that end of the year where the inauguration of Trump and him coming into presidency really came into play. But really you can look at it as like $80,000-ish is our floor, and 100, well, more locally, 90,000 is kind of that level we're failing to kind of break through locally. But I would say the upside of that is probably 100K, that psychological level. And really, you can just say that Bitcoin's mainly traded around that psychological level for the entirety of the year. It might have traded $5,000 to $10,000 higher. It might have traded $5,000 to $10,000 lower.
And that point there is important, isn't it? Because if we look back over a year, so we were just at the Australian CryptoCon recently, right? Yep. And when we were at the Australian CryptoCon a year ago, what was Bitcoin's price?
Yeah, it was 100,000, 99,000. I think it was pushing for the first time,
Right, and we're long-term believers in holding Bitcoin. That's really what we're trying to do. We're trying to build our wealth in Bitcoin overall. And in between that time, if we hadn't been playing the altcoin market and some of the altcoins that we're going to look into, and I'm going to brutally grade you on today, but if we hadn't been playing that market, things would have been pretty boring. And in hindsight, looking back, we wouldn't have done overly well. I mean, we might have been down or at the same level. So that's a really big, important part that you raised there is, that it has just been a bit of a sideways action for about a year. Look, before we go into grading individual investments that we've made, what I want you to do, I want you just to give the audience a bit of insight to what our strategy is, the three type of holdings that we look to hold on the Crypto Academy. So your majors, your mid-level and your low tiers. Give us a bit of a run through of the strategy.
Yeah, so I guess the important thing to actually note is that our strategy is kind of forever changing. Not forever changing. I could say we've had probably the one strategy in place for now, but I think as we've discussed prior, and obviously as most listeners know, that the market's forever changing. So this day and age, it's all about having those high conviction, lower risk investments because, yeah, Bitcoin's no longer the lifeboat of every investment. You can't spread yourself thin. So what we do at Imperial Wealth is we really try and hone in on what we call a high conviction altcoin portfolio, where we really look to only invest, say, into maximum 5 to 10 coins. This might be a strategy around where we place majority of our units in, and this is Bitcoin aside, by the way. We do believe that anywhere from 80 to 90% of your crypto portfolio should be in Bitcoin, and then it's about speculating on altcoins. But let's talk about that altcoin part. Ethereum for us is our biggest investment in terms of units invested, and we still believe that most altcoin holders out there should have that as their base holding. Ethereum is the number one altcoin that there is. An altcoin is just an alternative cryptocurrency to Bitcoin. Ethereum's number two. The reason for that is it is kind of the house of finance, of decentralized finance. Aave, all the layer twos, all of this occurs all on Ethereum. It is kind of the backbone of what is kind of the number one utility in cryptocurrency. And then we have other high conviction majors outside of that. So that's kind of tokens like your BNBs, your Solanas, your Hyperliquids. And that's where we kind of try and disperse outside of Ethereum a lot of our portfolio into. And then we might leave a little bit to then speculate on those higher risk plays that you said that we call it unit sizing, which let's just call it 1 to 2% of your portfolio size. We might be spreading into a bit higher risk projects that we're willing to probably see go to zero, which a lot of them do, or they might provide that very special 10 to 100x return, which the other high conviction, low risk ones might not. So,
and they're also important, right? Like the thing with the crypto market that you've highlighted there is it's forever changing.
Yeah.
So there can be a time, I remember specifically we were having a chat, we were like, crap, it would have been better if we just held Bitcoin. These altcoins are literally just making our life hell right now. Like we could have just gone in on Bitcoin, and we did go into Bitcoin. We're going to look at that as one of the trades that we did in 2022. But in hindsight, in between that time, there then comes times where the altcoins are absolutely popping off and you're making your value. So I think what you do so well on the Crypto Academy is making sure that you are heavier in the lower risk, guaranteed in quotation mark return options. But of course, you're still spreading your chips into some of those mid-risk, low-risk options. And we're going to look at some of those as we go through it today. So look, the first project that I want to rate out of this cycle was actually Bitcoin. And if we take ourselves back to that 2022 period, Bitcoin's just dumping to the floor. We talk about all the time that we were in Miami sitting there looking at each other going, what is going on here? Bitcoin had come from a high of 60,000 all the way down to 15,000. And talk us through when the market was coming down. We're sitting in the bear market right now. Why did you decide to allocate units towards Bitcoin and not put it into, some, altcoins which were good value?
Yeah, so I do want to just preface this by saying that I don't think there's ever a bad time to invest in Bitcoin. And I think I'd say this to a lot of people because I have almost 10 people a week ask me, is right now the right time to buy Bitcoin? Is right now? And I just say to them, I don't think it's ever a bad time. And it really is dictated by what you believe in. And if you do believe and you are investing in Bitcoin as that hedge against the fiat scam, inflation, monetary and fiscal policy that's very reckless, then there's no bad time. And we've had conversations. I had a conversation with a client in 2024 when he was asking me when it was at that 60 to 70,000 range. I actually got him the chart and I showed what would have happened if you bought it every prior all-time high in the prior cycles and how much money you'd be up. And it's the same thing as right now. I'm not saying go and put all your money into Bitcoin at 90,000. It just goes to show that if you do actually look at the infancy and history of Bitcoin, that it trajects upwards most of the time. So it's never really a bad time. But yeah, going back to 2022 and just looping that back, is we have that belief, right? So when we see it at such a large discount and we see Bitcoin come down to that historic, and back then this was when cycles exist. Well, when we were heavy believers in the cycles and they were playing, and it did play out correctly, is that we saw that 80% or 77% pullback. And we do a dollar cost averaging strategy, which is something I was going to touch on before when we were talking about how we strategize into these high conviction holdings. And with Bitcoin, we bought it at $27,500. We bought it at $25,000. We then bought it at $22,000. Then bought it at $19,000. Then we went and bought it at $17,000 in allotments of 2.5 units, whatever it was, to get a total amount on it. And the reason is because we wanted to use that as a guide first and foremost, because this is an altcoin service. But also Bitcoin dictates the market, right? We all know that. That's been ever so prevalent this cycle. And yeah, it wasn't about trying to nail the bottoms and tops. No one's able to do that. You said it very importantly before that no one has 100% strike rate. And I think that's the most important thing about crypto is making sure your winners are just bigger than your losers. And
100%.
we'll touch on this when we touch on a few other projects later. But yeah, with Bitcoin, it was simple. We just went into that bear market. 3AC happened, Luna happened, FTX happened. All these things were happening. But fundamentally, you need to block out the noise. And if you have that belief in what Bitcoin is, you see it at such a heavy discount, which you might see it as now. Like a lot of traders and investors probably are seeing that. You know, it's come from 126 down to a low of 80. This is a serious discount on an asset that's having, you know, that's a global phenomenon, and that's going to have its impact. And really, that was no different for us, right? At the bottom in 2022, we just followed our strategy. We followed what we know best, and yeah, look how it turned out.
And there's a few things I want to highlight in what you say there. One thing is understanding the market, because that's, for me, why you chose Bitcoin, because you have long-term belief in it, and you understand that in 5, 6, 7, 10 years time, Bitcoin is very, very likely to still be here, right? As opposed to some of the other altcoins, which may have been good value compared to where they were in the previous bull market, they may not be here in 5. So there's one part of understanding the market, but then there's also conviction. And that is really, really important. It didn't matter to you or to us when we were talking about it that Bitcoin was at 60 and now it's like the lower it got, the more we're licking our lips. Literally had such conviction in the long term. And like you say, the method that I call it is the hamburger method. No one, like, don't worry about the bread on either end of the hamburger. Take the meat in the middle, the good stuff in the middle. That's exactly what you executed. But this investment, I actually rate a solid 8 out of 10. The reason I don't give it a 10 out of 10 is potentially because people out there will say, well, of course, Bitcoin, you know. We get it. We weren't picking some coin out of the hat that, you know, no one else knew about. But I give it a solid 8 out of 10 because of that dollar cost average strategy that you implemented, how close to the bottom of the market our average price was.
I think that's the important part that we pointed out before. You know, no one can pick the bottom, but I think if you were to ask any investor probably on planet Earth, if you could rewind to 2022 and your average buy was $22,500 on Bitcoin, would you take that and, you know, return on investment of about 500, 600% in 2-3 years? They're probably going to take it, aren't they? 10 out of 10 times. So, and just one other thing on that conviction you were saying, like it's all good and easy to say you'll invest in something, but unless you have the conviction to do it, it's a lot different. And I actually think in the Crypto Academy, that's the best thing about having people like me, Will, Cal, and Taylor around is like any retail, 99%, and I know because they're all my clients and it happens every time, is everyone wants to buy when it's pumping. All of that conviction and belief in the retail investor is lost when prices go down. It's happening now. It happens every few months. And really, I think, without tooting our own horn, is that's our best quality and aspect in the Crypto Academy is we're able to actually action ourselves what we're doing, show you the belief is still there, show you that even at $17,000 that we really, really, really still rate this asset highly and we're investing in it, and you're able to follow along and kind of enjoy that conviction as well, which you might not have had if you're on your own. So
that perfectly said. And even myself, I've been in crypto for 10 years. I don't follow the market as closely as you do. And to be able to message you and just get your honest answer, like, Mitch, I'm thinking about putting 20 grand into Bitcoin because it's dumped down to the 85 level. Do you think it's going to go lower? And just a quick answer of, well, yeah, it could go lower, but this is a great level. And okay, that makes perfect sense. Yes, I'm going to put it in. So really well said. We're going to move on to the next project. It's still that 2022 period of time. And this one is, a project that did incredibly well at the start of this cycle's bull run. And that's Solana. Talk me through, because there were so many other options at the time of similar projects like Solana. What made you pick Solana over something like Polkadot or Atom, for an example?
Yeah, so like, I'm not going to lie here. There wasn't some very specific narrative or something that I favored back then that made me go, this is so much better than everything else. It was actually just a part of a basket of cryptos that I was heavily interested in. And for those that remember, and for those that, know the history of Solana, it was the major runner of the prior cycle. For context, it went from 1 cent to $200 plus. And really, it was the discount factor, very similar. And as we've discussed on the prior podcast, and as most people know about me, I'm more of a numbers data statistical technical analysis guy. I use the fundamentals and utilities to find projects I like, but I begin investing based off the prices and the technicals. And it was a similar thing to Bitcoin, right? So I had a blockchain that I saw that I knew its UI was much better than other layer ones. I knew its transaction speeds per second was far better than anything else, still is. And the only knock on Solana's tech, fundamentally and from a utility standpoint, was that it would go down at times, which isn't great. Like a blockchain like Ethereum, for instance, has never been down in its existence.
Yeah, that's right.
And other ones, of course. So there was one knock on that, but really it had come down from 200, 250 USD, whatever it was at the top of November 2021. It came as, and I just decided to start laddering orders in at $30, $20. And once again, like we missed the bottom.
What's it at now? And what has it been? It was at about 140 now? 120 now?
Yeah, it's about 140 now. Yeah, it had an all-time high just shy of 300, or maybe it touched 300.
So it's up about 7x now.
Yeah, definitely. And if you're talking from the bottom, it's up at 25x or whatever. But once again, like Bitcoin, it went perfect. But, at being the number one runner and the number one blockchain of this cycle, arguably, outside of Bitcoin and Ethereum, is that, once again, you go and ask any altcoin investor this cycle, if you went all in on Solana, well, not all in, but you allocated a large portion of your altcoin portfolio Solana at $25.50, which was our average buy, I'm sure 100 out of 100 investors would probably take that. But yeah, sorry, just to circle back. Yeah, it wasn't like some magical thing that Solana had that others didn't. It was just really recognizing the utility and fundamentals of a project and then getting in at a time where I knew it was heavily discounted. And what helped that was the FTX involvement. And it was actually...
Before you go into that, I want to recap that though, because there's a few things that when people are looking at projects that you've said here that are really, really important. One is you're looking at Solana, where at the bear market, it had performed well previously. So you have faith that there's something there, right? There's value there. Another one thing I haven't heard is, did we know that was there a meme coin kind of pump fund? When did pump fund get launched?
No, it was later, but later. I was going to say, like in investing and in trading, as any listener knows, and as you know, there's a form of luck involved. But you create your own luck. And what I mean by that is, like, we got so lucky putting so much into Solana because of the meme coin super cycle and the pump fund and era that happened. And no one could have predicted that happened this cycle. And I didn't predict that was happening when I was buying Solana. But what I mean by creating my own luck is the few points that I raised prior to that is I loved Solana because of its transaction speed, its UI, its ease of use.
Yes.
And you can actually only create pump fund and, high liquidity, high fast transaction environments if you've got that UI, if you've got that transaction speed, and no other blockchains could do that. Ethereum, too slow. Layer 2s were just becoming big, but no one was just going to build an entire, you know what I mean? And so what I mean by creating his own luck is we identified those fundamentals and utility, and it just happened to play out that that's what it created, that meme coin super cycle.
But people would say to me, oh, you got lucky when you started your business. At the end of the day, I have to say, well, not really, like we stuck at it. We've gone through the hard times. So I wouldn't say it was luck. I think it's a combination.
No, it's creating your own luck, as you said.
Exactly right.
With your business, like you had enough conviction, just as I did in Solana, and I think to give it a crack.
I think with Solana, that combination that you're saying of it having previous results, it having a UI and everything that works relative, like Polkadot was shocking. I don't know what the hell that was. But actually, it's built for developers.
Still don't know. Someone actually messaged me this morning saying Polkadot just hit the $1 mark. I said, so geez, that was $50 the last time I looked. So
insane. That combination and then community as well, I think is a big thing. So look, I grade that one a 10 out of 10. And just the reason being is probably because of that conviction side of being able to still see something go from such highs to such lows, being able to assess everything that's there and still not go silly on it. Like obviously we got into the Bitcoins and didn't just go all in on one altcoin, but to put it into it and it be one of the best performers. 10 out of 10 on that one. Now, deep breath before we talk about this. We've got a few more demons on this project, but we've got to talk about the losses because, as we say at the start of the episode, the losses are where we learn from our mistakes.
Correct.
Just quickly, if you're ready to take your results to the next level, my team at Imperial Wealth Crypto can help. Inside our Crypto Academy, you'll get access to my personal portfolio, strategies, real-time market insights, and the exact plays my team and I use to stay ahead. With our team of analysts monitoring the markets 24/7, we've helped investors catch moves like a coin that's done a 5x in 4 days. If you're serious about accelerating your wealth, click the link below to book in a call with my team of experts and see how we can help. Now, back to the episode. We got to talk about the losses. And I'm going to phrase this one as Phantom and Sonic because it just makes it a bit easier to talk about.
Yeah.
We did quite well on Phantom and Sonic was the demise. But let's go into it. So do you want to just preface it quickly, what Phantom was, what Sonic was, talk a little bit about the transition that they made and the founder behind it. Talk to us through originally why we were backing it and why we were so confident into it, and then run us through a bit of the demise of what happened.
Yeah, so I think like a lot, like kind of like Bitcoin, Ethereum, and even Solana, like we liked Phantom because we had prior success on it. So we were investors in the last cycle, did quite well on Phantom. We used it heaps for DeFi. A lot of what we do at Imperial Wealth is based around DeFi. So really we had this love for Phantom and Sonic because of how good it was in that space. For those that don't know, the CTO or Chief Tech Officer of Phantom and now Sonic is Andre, who was pretty much the inventor of DeFi Summer. And he was really the one through, you remember all the projects from last cycle, Yearn Finance, Keeper. He created all of these.
His rap sheet was unbelievable.
Yeah, unbelievable.
Like literally the founding father of
yeah. And so all of these programs and even a lot of the tech, like we were talking about VE3, the small, like he invented all of this technology pretty much and was the first user of it. And now you see these Aerodrome and all these really good projects that utilize this tech. That was actually code written by Andre. So that was to answer your first part about why we loved it. Prior success. We really believed in the tech and the dev. This is when we'll get into the mistakes we made. But yeah, I think that's all you really need to know. It was Phantom. It actually did die out a lot in this cycle, Phantom somewhat, like a lot of other projects, but we stuck with it. We really liked it because of what I said. We could utilize it for yield. We could earn
I was
periods.
Like killing it on
in periods of
on Shadow.
Yeah, in periods of like e.g. this year, or even at the start of this year when we can talk about even when we're still in the green on it, like we're using the VE3 technology on Shadow. Blake, one of our really good friends from Australia, was actually the builder of one of the only dexes left on Phantom in the bear market, which was Equalizer.
I want to tap on more on that as well.
Yeah. So really we had, this close kind of affinity with it because we knew people in it. We'd done so well in investing in the native token, but more so we'd been making so much money in the ecosystem tokens as well. And what essentially occurred was, in Phantom, it kind of ranged all cycle. I think it went up 60 cents at dollar mark, coming back down to 30 cents. And it wasn't really until late last year when we were gearing up for the changeover to Sonic, or the upgrade to Sonic, I should say, where it hit about $1.40. I think our average buy was around 30 cents. We were buying it in the bear market 2022, same time Solana, 16 cents, 18 cents. So, this is like a 6 to 7x, 8x return on those initial investments.
Before you go into Sonic, so let's stick on Phantom for a bit longer because what I want the audience to get from this story here is things can be so good for such a good period of time, but what we learned from this was where the warning signs were, right? So before we get into the Sonic side, let's just recap on Phantom. We've got Andre, founder of DeFi, really. We've got Equalizer, Blake Hooper. He's basically built an amazing platform there. We are printing yield on there. At the time, I remember the old podcast that we used to do. One of our ones on Phantom going to Sonic was one of the best ones. And there was not much else going on in crypto. There wasn't really projects that were like, this one's going to kill it, that one's going to kill it. Like this was like the only really good thing, similar to Bitcoin in the bottom of the bear market. So just to recap that like how good this project was at the time and everything going well, then the transition to Sonic happened, which is an upgrade. And
And I think really the gist of where this all went wrong was the tech was all there. As we've said on a few podcasts now, it's the best tech we've both used. So I still stand by that. And like, no matter what happens from here on out, I'll never use a more flawless, faster, performant EVM blockchain. So Solana aside, it's got it's up to 400,000 transaction speeds per second. It's never had any downtime. you know, we've used, as we said, if you go and use Equalizer on it, use Shadow, use Spooky Swap, whatever it is, it's just flawless. It's quick, no transactions fail. So from the tech side, it was a very, very easy investment for us. But where we went wrong, and what actually matters probably the most in crypto is strategy and marketing. And there were a few people high up at the Sonic Foundation, or formerly Phantom Foundation. I won't name names, but yeah, people that were head of strategy.
I wanted you to name his name.
The assistant, we will call him. Even the prior CEO, I didn't think did really much. I think, who knows actually at the end of the day what really happened.
You never do really know.
Yeah.
The warning signs.
They were there. And in hindsight, as we know, is a beautiful thing. But yeah, I think the lesson we can learn is when you see the writing on the wall, just go with your gut feeling. I think the first inkling for me, which relates back to Blake, and Blake will hopefully watch this and agree, was, the first real big red flag I watched was they didn't show any support to Equalizer,
Bizarre.
Didn't help Blake out. That was all that was left on Phantom, despite it being such a much higher valuation back then. And now really all that was left on it was a few meme coins and Equalizer, which was carrying the community. So what happened when they went to Sonic was they completely shafted Equalizer. The new project on it was Shadow that we spoke of. And we made a lot of money from Shadow. Like we were printing yield, like we're making thousands of dollars a day.
It was one of those moments for me, like I'm a Leo. I'm a loyal guy, and I hate like cutting ties with people. I'll go like to the ground with someone. And from an investor's point of view, you can't be like that. And I strive not to be like that. And I remember we were near the Sydney Harbour. Blake lives in Sydney. And I'm chatting with Blake and I was like, I need to tell you, like, if things start going south with Equalizer, I'll be selling. You know what I mean? Like, there's no hard feelings or anything like that. And that was when it was for me. I had to jump. Phantom Equalizer carried it, as you say. We were making so much yield on there. Sonic comes out, and for some reason, the team just, as you perfectly said, completely shafts Equalizer, doesn't want to give it any recognition on X, doesn't want to pump it up to people, doesn't want to push liquidity over there, and they bring out this Shadow exchange. And like I had to cut across and go on to Shadow and start printing on there. So. Yeah,
and it was kind of the right move for them initially because it actually did bring so many users to Shadow. Shadow at the time for market cap to revenue generation and feed generation for its users was the #1 project in crypto.
It was crazy.
Like, you know, for a project that had, let's just say, a $10 million, $20 million market cap at its height, was printing millions of dollars a day for people. So, and then like really just generalize where they went wrong. They did an airdrop, which was super poorly executed. We've seen how significant and enriching these airdrops can be if they do them the right way. Hyperliquid, which we'll probably touch on in this podcast, is the best airdrop in cryptocurrency history. And Andre and them tried to do the right thing, and they had the right idea by wanting to enrich its users and reward those loyal users that had hung around. But by this stage, they'd killed the community by shafting Equalizer. They had poorly executed the airdrop. They had poorly executed strategy, marketing, partnerships. Remember the exchange ordeal when they first launched? Like they came out on Binance and like, all these warning signs, and they couldn't communicate with Binance.
Yeah, that's right. Because
then they decided S ticker, so you type in S, but it would come up with every single ticker that started with S first.
Oh, so just a disaster.
So everything pretty much that could have
calculating of the airdrop.
Wrong, and then heaps of people got shafted. The airdrop got cut off because they didn't do enough. Like it was just ridiculous. Like honestly, everything that could have gone wrong with the upgrade and launch of a new blockchain, to marketing it, to strategy, to airdropping it, went completely wrong. Ever since then, it's gone even probably more wrong.
I'll jump in because look. So I mean, if we put it in context, they moved from Phantom to Sonic at around the $1, and pretty much just over time it just melted. 90, 80, 60, or 60 is a good level down to 30, 30 down. So it just started melting. And I think the thing before I rate this that we've learned, and I want the audience to learn, whether you're following our service or you're trying to hack it on your own, which we don't recommend. But the thing to cover here is, as you say, when the writing is on the wall, at least remove some exposure. You know, start going, well, it's not what you're saying it's going to be, and have that guts to
and I'll touch on that. Like we're like no one investor, as we said, has 100% strike rate. And once again, every investor has human psychology and emotions, and that was probably a case one time where we married our bags too hard. And we're professional investors, you know what I mean? We're not perfect. And really, we did see the writing on the wall, but I want to touch on why it's so important to have your winners outweigh your losers. And we'll touch on a few of these projects, I'm sure, in a second. So, like the way I see it as, and why I was never so emotionally affected by Sonic in particular when I was buying at the start of this year, more around when it's because I invested in Hyperliquid at the time. And the beauty of cryptocurrency is you can only draw down a maximum of 99%. Most of your winners in cryptocurrency will be 400, 500, 1,000, 2,000% winners. So in the one time that I lost, let's just say I was buying at 30 cents, 40 cents, that would be down 70% now. I've made 500% on Hyperliquid in the same time frame.
Or Solana.
Or Solana or Asta or whatever it was. And so that's why it's important to still have that low risk, high conviction diversification, because even if you pick 5 projects, the chances of one of them going negative and poorly is probably at 100% chance. You're not going to pick 5 of 5 winners, 10 of 10 winners every time. So,
and I love that you say this, because in no other industry is it so true that it's not over until the fat lady sings.
Yeah, exactly.
And that's probably, there's a fine line between seeing something negative happening and just pulling out.
Yeah.
You know, that's really poor emotional investing. And actually going, okay, it's bad, but there is a possibility for it to come good. And sometimes it is better to just ride it to the ground, particularly when you've got the other winnings doing well.
And I think I've had a lot of clients message me that had invested in Sonic, and it probably has been their worst. And they tell me like, I'm down this amount. Do I sell? And when it's at the dust level and it's at a level where you're down so much, probably reallocating isn't worth it because of what you said. It only takes one catalyst in crypto to turn something from 0 to 100 again.
Yes.
And whilst there's a bit of cope and hope involved in that, we could wake up tomorrow and President Trump says we're using Sonic to blockchain to put our entire GDP on public. You don't know.
You don't know.
And it's not the best way to look at it, but there is a lot of that. But to touch on what you said, that's why there's the beauty in crypto, because like these are such highly speculative assets, right? You've got to have the guts to know it can go to 0, but that's how you get the big winners, right?
No, you're 100% right. And diversification, you don't want to spread too far. You don't want to be across 50 projects and you don't even know what's going on. You want to have, as you do, 10 to 15 max high conviction plays, and, see them out, have that conviction, and, let the market do its thing. And we were able to do that and cop a loss on Sonic and still be up nearly 200% now, even though Bitcoin is down 10%, 20% from last year because of that strategy. So when you've got the right strategy in the place, you can afford to have the conviction and let things play out, is probably what we'll finish on. Now, with this one, a rating, I'm going to give it a 4 out of 10.
Pretty generous.
A lot of people, and a lot of people would probably go 1 out of 10 or 2 out of 10. But just because if you understand how big a hold Sonic had on the market, that there wasn't much else out there, he is the founder of DeFi. And
like even going back to last cycle, and it's so unfortunate to look at. Like at the height of last cycle, it had $8 billion in TVL. As Phantom, as a weaker blockchain with less applications, only had a couple of things on it at the height of DeFi, and it would have less than $100 million in TVL with better tech, better resources, better everything. And it's just the nature of the game.
That's it. I mean, no one predicted FTX was going to happen. This stuff happens in crypto. Deep breath. Let's forget about that one now. Or we've learned the lessons from and forget the losses from it. And it could, who knows, as you say, literally next month it could be pumping. We still have a holding in it, so whatever. But moving on now to a more glorious story, and 2 projects. I'm actually going to combine them. You've mentioned them, Asta and Hyperliquid. We'll talk about Hyperliquid first because that came out first. Now, with this project, talk us through leading into it, how it comes to your desk, how it comes to your eyes, and talk us through why you had this project had not been launched yet. It's not like you could have seen the product, the service. What was it about it that made you go, yep, this one we're going into, and had such conviction on?
Yeah, so I will slightly correct. They did have a product, which was the Perp Dexo. So it's one of those funny cases, and this happened to a lot of people, that I had been shown Hyperliquid for some time, but because it didn't have a token, I wasn't interested. Because I was using Bybit, I was using Sexes. I'd been invited by a few friends, trader friends that I have, and they said, you've got to use this Hyperliquid. It's a Perp Dex. I think, me and you'd used GMX in the past. We'd been invested in it. I think, to be brutally honest, we'd done poorly on it. I just had no interest at the time. And it was a huge narrative that I relayed to my clients at the start of the bull run that I saw as a hugely positive narrative to invest in this cycle was perp dexes and or just decentralized finance in general. But back then we were looking at GMX, Sushi Swap. We're looking at these kind of OG ones. So I always had the narrative in mind. When it dropped, it was really like similar to the Asta one where I had to, in a few hours or few minutes, kind of make up my mind. It was moving so fast.
Top blasted.
Yeah, back then it was. And it was
that
actually fearful at the time because it was like buying $6, $7, $8, $9. At Asta, it was 30 cents, 35 cents, 40 cents, back to 34 cents, buying more, whatever it was. And the way that I like to break down kind of crypto investments is there's ones where you invest based off utility and fundamentals. Others is narrative based. So like if meme coins are running really hot, you just want to run with that narrative before it shifts narratives. And then other ones is actually value accruing and products that make sense in the TradFi or real world. And that's what Hyperliquid and Asta are. They are products that generate fees and revenue for its users. So for stakers, for you know, Hyperliquid, everyone's got their hype staked on. I think it earns like 2 to 3%. And you're essentially a shareholder in a product, right? In a decentralized manner, and that's what Hyperliquid and Asta are. Whereas a lot of other tokens, you ask like, what as a token holder, how does the value accrue back to you? So that was the really big thing for me with Hyperliquid and Asta. It wasn't just the perp dex narrative. For Asta, it wasn't just CZ, although that was a big part of it. The Binance backing, the YZI Labs backing, the CZ backing, but it was actually, okay, what products will be around in a few years?
Kind of the holy trinity, right? Like we look at narratives, whether it be the meme coin mania or you know, storage value coins, whatever it is. So it ticked the box of the perp dex narrative. It ticked a box which usually a lot of cryptos don't, of like a real utility, real traditional, there's value being made, there's revenue being generated.
Yeah, and I think that's the number one thing you have to probably be realistic with yourself about with crypto is that 99% of it is vaporware and they're not products that will be around. Like we love to
just a way of
speculate and we love to say how beautiful is blockchain, but the majority of the stuff that's built is crap, right? And I think that's what's the most important thing now about the discussion about these type of projects we've been speaking about, your Solanas, your Bitcoin. It's asking yourself right now in this type of iteration of an altcoin market, what will be around next cycle? You know, and it is tough because I feel like if we were in last cycle and I asked you, do you reckon Polkadot will be around? You probably would have said yes.
Yeah, I would have for sure.
But I think we were less knowledgeable back then about the real products and how they apply now to this type of
But on that, what happens is because we are in a tech industry, and it's the same thing happening with AI right now, right? Like if you asked me 2, 3, 4 years ago, would AI be? It moves so quick.
Yeah, agreed.
So because of how quick it's moving, you have projects that are the best, the Sonics, the Polkadots, whatever it is, at their time. But then new technology, new advancements, new projects come out, and you have to shift towards that quickly. So you got to be riding. It's like surfing. You got to be riding the wave, and when the next wave comes in, you got to be onto it. Otherwise, yeah, that's going to be in the dust. It's not coming back.
Yeah, great. And then I think the best thing probably about Hyperliquid, first is something like a Sonic. Like it's a really good comparison, right? Is their marketing, which their marketing was pretty much just naturally organic. They didn't advertise Hyperliquid. All they did was they said, we're going to try and enrich our users that have used our product as much as we can through airdrop campaign. And this pretty much was their entire marketing strategy. It had everyone got rich off using Hyperliquid. Everyone that bought in early got even richer because everyone just hodled their airdrops. No one was selling. And really Jeff and the team at Hyperliquid really created this product that generated money and fees to crypto native people, but then made sense to a TradFi and institutional side of things as well. So really it was a no-brainer. The marketing was there, the airdrop campaign was there, the product was there, the utility was there. And I think it made a lot more sense to me easily as an investor because I'm a trader. So I use the product. I use it now. I use it every day. And so I think that helped having conviction in something actually, because I think you could ask probably.
Same with me with like Sonic and Phantom.
Yeah, exactly. And I think that's probably, probably goes both ways. But I think 99% of people that probably buy a blockchain probably buy it on a SEX and they probably never used it. They'll go, probably 99% of Ethereum holders have probably never used Ethereum.
Yeah,
you know what I mean? Like
gone
on Uniswap and you know, or whatever it is, or used an application on Ethereum. It's the same for many layer ones. But I don't think that's the case for Hyperliquid. And I think it's why, and Asta, why it's been so successful is most of its holders are actually most of its users.
You're right, yeah. So there's just, there's so many combinations lining up, as I say, that kind of holy trinity of the, three big, the narrative,
Yeah, and once again, there's a luck aspect, but at the same time, it's recognizing value proposition of what you said. Okay, is there a product? Yes. Is there a blockchain? Yes. Okay, what are the partnerships and who's supporting it? Well, in the case of Asta, right, it really was, I'd never, ever seen a PVE trade come across my desk as this in my mind at the time. Like, it was literally just like, okay, Hyperliquid has 0 competitors. Binance Smart Chain at the time, I'm talking 3 to 4 months ago, BNB was 1,300 USD. Like, it had like shot up to the most ridiculous valuation. Okay, this is the hottest blockchain on the planet right now that people are wanting to use. Okay, they've just released this Asta product. Why is the CEO and founder of the largest centralized exchange on earth, who has never ever done a tweet on outside of BNB, Bitcoin, and Ethereum in his life? This is the first ever project he ever tweeted on outside of those 3. Why is he pushing it? Okay, YZI Labs is a big investor who's CZ's a part of in this project. All right, it's just launched. It's at 30 cents valuation. Let me compare the valuation of this versus Hyperliquid. Jesus, at 1/20th the size.
Yes.
From a value proposition, this makes sense. It's got the backing, it's got the partnerships, it's got the product, it's got the competition.
That's the thing with Asta, which you pretty much just summed up. Like, you just look at it and you go, it's CZ. He's just come out of jail. Yeah. Like, it's a bit of a meme play. But also one of the guys who's done so much in the crypto space. It's one of those ones you're like, this probably can't go wrong.
Yeah.
You know what I mean? So
I think it's more so, and it is a bit memey to say, like you said, but will the richest man and most influential man in the entire of the industry let this fail?
No.
And if you're asking yourself that when it freshly launched at 30 cents, you're telling yourself fat no.
Yeah.
And it's not fail. It's, will this man let this product die on the day? Like, we were investing in it when it was 30 cents, it was 2 hours after it launched.
Yeah.
So it's still very, very cheap valuation, but it was more so my thinking was like, will he really just let this sit around 30 cents? I don't think so. Every tweet that he does over coming days will drum up more engagement, will drum up more investors, will drum up more demand, more hype. And that's why within, I think, 5 calendar days, we had, 500% return on it at $1.50 plus.
And, I think we sent out to our clients, we sold off,
$1.70.
$1.70, like within 3 or 4. That's just nuts, Yeah. And I think that comparing, because they were both amazing tips, Hyperliquid and Asta, amazing tips. I think Hyperliquid had that, this is traditional, this is real, this is a utility.
Yeah.
Asta had a bit more of a gimmicky to it. Like,
sure. Well, the way I saw it was just, it was almost like a hedge for me in my mind against my Hyperliquid
100%.
investment. And it was like, well, now there's a real competitor with a real backer.
Yes.
Okay, well, there might be a chance.
It's going to take some market
share.
share.
Exactly.
And it did. It was fighting backwards and forward.
Yeah.
But the thing I really want to highlight, because there is different plays in crypto, is there are some of those plays that you're literally, and for me, like, you're probably a bit more analytical on it, but I was more just like, this is a hype play.
Yeah.
Like, and weird because it's not Hyperliquid. Like, Asta was it's not, you know what I mean?
The market needed something like that at the time as well.
And like, it just didn't seem like it would fail. I went very heavy on it personally. I know a lot of our clients did. I think, across our client base, probably 10 million in profit.
Yeah.
Across the board. So absolute awesome win. Look, there's one other project, and then I want to get into a bit of a recap. The last project I want to look at, take ourselves back to October 11.
Yep.
Massive dump in the crypto market. Big Donald Trump gets his loud mouth out there, brings back the tariff wars, massive liquidation event. The biggest in history? Biggest in
cryptocurrency history, yep.
And we often talk about, I woke up that morning looking at my phone going, fuck. Like, this is bad. Just constantly, everything's going down. Shit, I've got a lot of exposure in crypto. The first man I go to, my good mate Mitchy. And basically, we just looked at it, and you were able to calm me down and go, it's an overreaction. This is a market overreaction. And we bought into Link. So talk me why, maybe not so much why Link, because it was a bit specific to our holding.
Well, first and foremost, it wasn't just a Link specific thing. It was just, in my case, I wanted more Link exposure. And back in the April tariff crash, which was a very similar liquidation event, but it was a crash to 74,000 Bitcoin. I gave my clients a dollar cost averaging plan, and I said, look, guys, I'm going to set a limit order on Chainlink at $8. a limit order. I think I had one on Hyperliquid. It was much lower. Essentially what happened was I invested in those projects at that time and I had lower orders. So at that time I bought Link at $10. I bought more Hyperliquid at $10. And from April to then, like, you know, Chainlink went to, let's just call it $27 and Hyperliquid went as high as $60. But I left those orders in place in case of a crash that ever happened again.
Really important strategy.
Yeah, really important strategy. And like the amount of opportunity crypto provides you, almost as an investor, if you've got spare capital, it's worth setting these limit orders. We can teach you how to, we've got videos, instructions on multiple platforms on how you can set limit orders. And really it was just, once again, it's you create your own luck, right? And me specifically, I had $8 order that I said to my clients, I'm leaving. I know the price is much higher, but who knows? In the future, it might crash to this price. So we had that activate. We had other clients that did their own through our own guidance on coins like Ondo, other coins that crashed heavily. And as you said, we were lucky enough. I think it was $8.20 or $8, whatever it was, that I had the limit order set at. And within 15 minutes of that crash, it was trading at $17. So we were up, you know, 140%, 100%, whatever it was.
And that's kind of like how it is in crypto. It's like there's probably 5 to 10 days of the year where you need to be switched on and you need to have that conviction, get the order in or have the limit order in that grabs it for you, and you benefit substantially. The in-between time is just what you do amazingly for everyone. And I would never recommend anyone do it on their own because it's just ridiculous to try and tackle this market on your own, is just assessing where is everything shifting? You know, are we bullish? Assessing the economic conditions, assessing crypto in general, where's the money going to, right? So yeah, that's that was probably one of my favorite. I actually, I'll let you want to say something on the
Well, I was just going to say, like, as an investor, I think you've now seen both sides of our strategy with dollar cost averaging, where in periods of bear markets, that's your largest opportunity because it's a slow, gradual bleed, and you're able to slowly, like I explained through Bitcoin at multiple price points or Solana at multiple. We can get up any of our examples. Chainlink we were investing in at $5 in the bear market. That was one of our dollar cost averages, right? And then there's also bull market dollar cost averaging, which is more about seizing fast opportunity. So in the bear market, you've got slow, gradual strategy where you can identify very technical price points, slowly accumulate. But then there's also bull market strategy where you need to be aware of certain black swan events that can happen and have limit orders or have a strategy in place by professionals to be able to capitalize on this opportunity, because they're some of the biggest opportunities, not just the bear market lows, but mid bull market crashes or pullbacks that allow you to actually accumulate further at more favorable times because you know that they're going to bounce, right? And after such a large liquidation event like October 10th, which was the 11th for us, we knew the prices were going to see reversion. Like we've even had this large crash now, right? And Chainlink's at $14 right now. It's still almost twice as high as the October 10 crash. And the October 10 crash was only to 102,000 Bitcoin. We're at 88,000, I think, as of this morning. So always opportunity out there. You just have to have the right guidance and the right strategy in place.
Yeah, to kind of sum everything up there, you know, we've gone through these altcoins. I think the biggest thing that any listener listening to all this, if they can take in bits and pieces, is it's not easy. Yeah. Like it's not like the previous bull market where you can just go throw money at Dot and Adam and whatever looked good, Pepe, whatever it might be, and just get rich off it. Like you really need to have good analysis, good guidance, good group of people that you're surrounded by, and shifting as the market goes on. So I think that is probably the end of this episode. I've really enjoyed it. It's really good to actually just talk through and look back at the past. And this is something that we do on a daily basis, and we assess what we want to do in the future. But hopefully that gives the audience a bit of an understanding of how everything's gone and the processes that we go through. There's some highlights, you know, DCA. Have conviction. You know, do your research, follow good research. Don't get sucked into social media stuff. Anything else that you want to?
I think it's just an opportunity cost-based thing. Like one thing I seem to forget a lot. Well, I don't seem to forget, but like I'm in the market all day, every day. Like I'm staring at charts probably 12 hours a day on average for the last 5 years of my life. I'm on research platforms, social media platforms, constantly looking at. And what I forget is that the average Joe does not do that. And really, to be successful in this market, you can't just be so laissez-faire about it, where you can tune in once a week, or and this is if you're on your own, but you're able to afford getting away with that if you have a professional or someone that is doing what I'm doing. Really, as we said, it's not easy.
No.
It used to be easy.
Yeah.
It no longer is. So if you are that person that's sitting out there that's kind of like, oh, I just can't keep up with the news, I can't keep up with the prize action, missing opportunity, then this is something for you. Every single morning, as part of the Crypto Academy, you get updated on the full 24-hour cycle of fundamental news that's hit the market, which is forever evolving. Like, just ridiculous how much news comes to the market every day. Impossible to keep on top of unless someone's relaying the important pieces for you. We only do news articles on the important fundamentals. You get a weekly market update. Your high conviction holdings are consistently updated. Technical analysis of price actions updated. So if that's something that suits you and you think that you're trying to spend, getting home from work, you're too tired,
this and like I'm the biggest advocate for it because I mean, Mitch, you weren't always with us.
Yeah.
I used to do all this on my own, and I'm the first to admit it was possible back then to do it. Like, you didn't really have to do too much research. You just throw money at the crypto market and it just magically turned into fucking a lot of money. So, I don't do all that anymore. I run 2 businesses. I enjoy my hobbies. I enjoy my sport. Unfortunately, you do it all for me, and I'm very grateful for it. But I just don't think you can hack this market on your own anymore. And if you're going to, then take the key points that we've discussed today. Otherwise, reach out to us and jump on board with the success that we've been having. So thank you very much, Mitchell.
Awesome. Thank
you. For
you.
everything you do. And 10 out of 10 overall.
Thank you very much, guys.
Until next time. Cheers.
Thank you.
Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.